All right, what's up, everybody? Today I'm going to be talking about the BBAI, Bumper Bands AI. These are new tools that I just released or am about to release using AI technology, built with research and just so much time. I'm really stoked about these indicators because, as opposed to the indicators before that were very specific to time frame and asset, these are much more flexible and can be used on any time frame. They would definitely be more useful on certain time frames with certain assets, but they kind of latch to anything that you are analyzing. So I'm really stoked. Today I'm going to be talking about a little bit about my story, um, where I came from, how I developed the tool. Then I'll jump into really looking into the tool specifics and then how to build with them. But let's look at the strategy that's right here real fast, just to kind of start off. So this is a short strategy on a 10-minute time frame on Solana. And you can see for the full history of Bybit, this is the first day, or really the second day possible, and then till today. And with the crazy bullishness of Solana, it's still slowly trended up and to the right. This is definitely helped by this crossover moving average right here. It's the dual moving average that I have in this specific strategy, so it helps only enter trades when in more of a downtrend, and then the buffer bands do really the rest of the heavy lifting there. So yeah, just really cool to see. I've been watching the strategy for just a little bit now. I built it not too long ago and been watching it, and it's been doing great ever since. So hopefully we'll release it with the release of the BB10 AI. Drawdown is incredibly low, even recent history. Drawdown's incredibly low. You can see obviously it fumbled around here, didn't do a whole lot during the mid section of trading here, and because that would be October, November, basically canceled each other out. December was barely a green month, and then started taking off from there. So even against the volatility and the bullishness over here, I guess it kind of held steady against the bullishness, and then slowly made gains while Solana came down. So that's pretty cool. I'm excited about that. I'm also I just released this strategy for the 1 hour Bitcoin 1 hour, and you can see it actually just had a crazy great win right there recently after a couple small losses. Just a pretty massive win. So this is another one built with the AI tool, and then the last thing we're going to look at here is the 30-minute, and I have not built a strategy with this one yet, so it's just I actually want to demonstrate how it works with price action. But before I do that, let me tell you a little bit about my story, where I started. I started trading. I got getting interested in trading in 2016, 2017, and then really serious about it 2018 to 2019. And especially in crypto, it's a very it draws a lot of people in because of the gains. But my story is probably similar to a lot of people, where I started trading it, and it was a pretty decent time where I started trading it, and it made some great gains, and then just the market crashed, and I lost a lot of money because as I got more confident in trading, I was putting more money in, and then learned my lesson the hard way by not having a great plan, great tools to be working with. And so I vowed I would never do that again, and I would learn, if I was going to keep trading, which I wanted to, I was going to learn a better way to do it. So that's when I started doing some research on building tools and building strategies to trade. In that time, I came across Eric Crown, who is a great trader himself and has built some amazing tools with Agent Smith there on their Discord, the Crown Discord. And you can see this specific tool is a strategy builder that lets you use external indicators to build a strategy. So with the bumper bands, you can use the close below or close above the bumper bands as an entry for a trade, and then you can pair it with the slope of oscillators or thresholds, different things like that, and it has risks and all that stuff involved in it, risk limits involved, so helps keep you safe. So it was a great tool to use as I was developing my own tools, because I could compare or kind of test them out and see how they would trade in real life, for example. So as I built this bumper band idea, I would use the skeleton key to kind of see if I was onto something, and so yeah, it was pretty fun to work with that. So my general job, full-time job, used to be, and I still do this, though I've gotten into trading a lot more and trade. I would say I trade full-time, but my bots trade full-time for me. but I am a producer, songwriter, and musician. Live in Nashville, Tennessee. I'm in a band that tours nationally, and it's just been a crazy journey. Really exciting stuff has happened there. But as I was on the tour bus and waiting to get to the next venue, the next gig, or we'd play a show, and it'd be 11 o'clock at night, but my mind was still wired, and I still had a lot of energy. So I'd sit on the bus, and I'd just work on building ideas and indicators, and eventually came across this idea that I have now turned into the bumper bands based on volatility. And I always would notice that oscillators tended to have their limitations, right? Because oscillators are limited by 0 to 100. So if I zoom in here on like the BBWP, you get your limits here at 100. It can never go past 100, and it can never go below 0. So price action can be in dramatically different places, between one 100 read to another 100 read to another 100 read, and they're definitely useful for certain things. But I found that, the idea was that I wanted to create an on-pain indicator that followed price action, no matter where price action went, and could use some oscillators to cross-reference and build strategies with. But this tool itself, it was just built around that idea. I wanted kind of a volatility oscillator on chart. And so that was the general start of the bumper bands. It took me so many iterations, like probably 3 or 4 years by now, of iterations and work to really get the bumper bands to where I want them to be. And recently, just started using AI technology to better them, do better research for them, and progress them further. So it's really cool to see these strategies start paying off. And now let's jump into the functionality of the bumper bands. I think I mentioned before that the bumper bands now are not limited to a time frame. At one time they were limited to a time frame a bit more. I guess they weren't necessarily limited to that time frame. You could use them on other time frames, but they were a lot less effective on other time frames because they were built more around the data from one time frame, if that makes sense. So now these tools work on any time frame. So the 30 or 1H or 10 over here, you see the 10 AI. That's just a way to describe how they function, and I will show you what I mean by that. So now if I put the 1H on here, you can see the support band generally is kind of close to the same. The resistance band, though, tends to be a lot different. That's just due to the math and the way that they were designed. And I wanted to have different tools that kind of did different functions, if that makes sense. So the 1H is more designed for a little bit more of trending strategies. All of these, I would say, are a bit of a scalping tool, but the 1H I would say is more of a trend than a scalp, and I'll explain what I mean by that in a minute. But let's look at the 30 AI real fast here. You can see that it turns red when it closes, when price closes below it, and green when price closes above it. Sorry, getting tongue-tied there. It generally, the resistance band generally tends to follow price pretty closely. On the 1 hour time frame, the major difference is the resistance actually tends to push away from price action a lot more. So as price action and volatility expands, the 1H will expand with it and try to get out of the way so as to not close a trade prematurely. The general way that the 1H functions is it waits for a push to the upside, then as volatility dies down, the bands will come closer together. Then as volatility expands, they'll start expanding, but not at the same rate generally as volatility does, so it'll catch an exit. Again, this is just how it's designed. It doesn't obviously always catch it perfectly. It'll try to catch price on an expansion after some volatility expansion there, or volatility contraction there. And you could see price still actually went up a little bit higher before it dropped down again. But if you were in a trade right here, that's not necessarily a bad place to get out, especially if you want to try to enter another trade in a lower place somewhere down here, or even later somewhere over here. So that's the general way that it works. And so I will use the 1H if I'm trying to get strategies that are a little bit more per trade net. You can see over here, this is 1H on a 1 hour time frame. Just building a pretty great strategy since 2015. Just really, really incredible. You can see recent history. Also great. Last year, incredible. This year, it's been doing pretty good. A little bit down in February, but man, not too bad at all. And this has pretty good risk management. It's one that this strategy I released on the Discord already using the 1H. But yeah, so that's kind of how they function there. The 30 AI is going to be a lot more of a scalping tool. The 10 AI is going to be a totally different function because it's built for lower time frames. I actually haven't experimented with it as much on higher term time frames, but we'll see how that functions. Recently, I've just been doing a lot of building and trying to get this stuff out. Then I'll start building strategies with them, but I don't want to get too far into that right now. Okay, so let's look at the bumper bands themselves as a tool. The first thing you'll see when you open the bumper bands tool is the distance space coloring of the color gradient, and that is just kind of a nice visual for if price action is generally trending down, you'll see the bands are kind of more red. If price action is trending up, the bands are green. And then in that, when price action closes below the bands, they turn red. When price action closes above the bands, they'll turn green over here. I do have to actually maybe edit this code a little bit more because every once in a while it'll turn green with a wick above it. Even though it doesn't close above it, like here probably is a good example. It's still kind of green, but it didn't close right there. You can also adjust that though here, right there. The ATR it's just literally analyzing how far away it is from price action. So you can use that to change the coloring and how drastic the coloring is, all of that stuff. Feel free to mess with it. I found these default settings are generally pretty good. The exponent AI. All right, so this is the new part of the bumper bands, what allows it to work on any time frame, and it allows you to adjust how it looks at that time frame specifically. You can go down as low as -1 and up to, I don't remember, it was 4 or 3. I think it was 3. So this will widen and narrow, make the bands wider or narrow, but it's very different from just offset. I'm going to wait till that analyzes. It's very different than offset. So offset is down here at the bottom. It's master support offset, master resistance offset. That will just simply move the bands a percentage up or down. They'll have the same exact contour and they'll look exactly the same. You can see when I change the exponent AI, these actually though start looking. So the idea is they look at a bigger window of time and volatility over that time to create support and resistance. So you can see they get a lot more blocky because it's taking into account all of these more and more bars, basically, is the idea. And then exponent AI being negative will take into account less. It'll narrow the bands and make them way more responsive to small individual moves of price. So that's the general way it works. I find that generally starting it at 0 is a great place because it kind of, again, latches to the time frame that you're on, so it doesn't have to be anything. But sometimes as you get into higher time frames, like 2 hour or whatever, it is helpful to go -1, -0.5, something like that, or positive. Honestly, the sky's the limit. Like, there's so many possibilities you could try with that. We'll actually build with it in a minute. But then you have your time factor for each layer. So the idea behind this is the bumper bands are built out of several layers of analytics happening at the same time, generally 4. So on the bumper bands 30, BB30, there's 4 supports, 4 resistance layers, and they're all doing a little bit different function and operating a little bit individually of each other, but then creating the master support and resistance. And I'm probably going to rename this because that's not... I don't know, I'll rename it too, but basically the tooltip kind of explains it here, but it adjusts how aggressively the window of time is looked for that specific layer. So the idea is as you go more positive, you'll have fewer signals because it will be reacting a lot faster, if that makes sense, to price action. As you go negative, it'll shorten and it'll have generally more signals. Each one will only make kind of minor changes to its own layer, but it allows you to really dial in each layer. Then you have your type, which I added 2 other types to the layer here, so you can have anything from SMA to KMA, which is a very different kind of type, and that's pretty cool. It's just to mess with. I've only messed with a little bit, but it does actually tend to be useful on occasions. Then you got your length, and that is again for the specific layer, and it kind of adds smoothness or whatever. Lower, it reacts faster, but it can be noisier. So that's the idea behind that. The offset is just how much that band gets pushed or pulled towards price action. And then you have that for each band, and then you have your master offset down here for the master support, master resistance, and at the bottom you have your smoothing. I'm leaving it on 1 because I generally don't want to use smoothing, so smoothing length of 1 means it's not smoothed at all. Then as you go up, you'll see it'll definitely smooth out the whole master and the whole support. And it may or may not be useful. I have no idea. I just kind of added that as a little feature that I'll experiment with over time. And if it's not useful, I can take it out. But if you guys find it useful, that's great. But okay, the last thing to look at is the midline settings. So right now the midline is literally right in the middle between on each closure, each bar right in the middle between the support and resistance. And you can weight the midline heavier towards resistance or support if you change this box right here. If you want to, maybe you're experimenting with the highs or the lows or closing above or below, something like that. With the midline, it just adds some functionality. Then again, the smoothing length is on 1 because it's not smoothed, and if you want to add smoothing type or smoothing length, you can. The smoothing type will not affect it unless the smoothing length is greater than 1. And that is the general idea behind the Bumper Bands AI. All right. So hopefully that helps as you guys are building, just to get an idea. I also tend to, when I'm building with these tools, if you're trying to analyze what it's doing each time you change it, you're going to be doing mentally just a crazy amount of work. So I found it's best to build with it in conjunction with the skeleton key and see actually what it's doing to price action. So let's go ahead and do that real fast, because this will cut a lot of time and frustrations out. So if we just say we're going to do a long strategy when it closes below support, going to enter. When it closes above resistance, we're going to exit. So that's the general strategy. And then I'm going to have just a risk stop to help us out here, and that's it for now. Okay, so literally it's just the bumper bands and a risk stop. If you're building a strategy, I tend to find that I do it in a different order, depends on what I am building for. So for example, if I want my strategy to be the most gains possible, but a little bit higher risk, then I will leave off all risk settings as I build it, and then towards the end I'll add the risk settings, and I'll try to find the risk settings that are most lenient but still have some risk involved, because you have to have risk involved in your strategy, at least not financial advice, but it is my philosophy that I always want risk involved so that it closes trades if they look like they're going to be losing trades. In that, though, it's going to be closing trades that end up later on being winning trades. That's just part of the game of it all. But yeah, so if you want to make a strategy that's way more risk sensitive, I will start by doing a little bit of work with the bumper bands to get some kind of strategy started, and then pretty fast add risk, and then go back and build the bumper band settings from scratch again. So I just did one over here, this 1 hour. Its settings are, I think it's a 3% risk stop right now, 3.1 max stop loss, and that's not limited. And then it does have ATR risk, and it has emergency risk. So it has 3 layers of risk. So that does help it, but it's still, I would say it's mid-level risk. If you want a real low risk one, you can put it on, literally 1% and limit that, and then you don't really need this other stuff because that's a very small risk. And you'll see how it affects the bands. I actually already released a version with stop loss at 1%, and I adjusted settings so it's not going to be the same. Like, we'll see what it does here. It's actually not too bad even as it is. So yeah, that actually works decently well. Surprisingly, that's pretty great. But it does, you can see the total profit and loss is way smaller. The drawdown is only a bit smaller. It does really, the earlier trades here really hurt it right there. And I think this drawdown, let's see, it's from 270 to 248, so basically 250 to 70. So that's about 20%. So yeah, I guess that drawdown is about right. And let's see what it was before. I think it was 23 or something, which is a little bit bigger. But I do the 24. So yeah, it did cut down a decent amount on the drawdown. but obviously the total profit and loss was cut in half as well. So that's something to consider. The one that I released on Discord that has a 1% stop loss actually does have a way better drawdown than the last one. I think it's like, was it 14 or 15 max drawdown over a 5-year period? Not too bad. But yeah, so that's the kind of the philosophy when I'm building with these strategies that I use. But let's go ahead and build something here. So I'm going to, that's with smoothing on, which is kind of interesting. Let me put smoothing back at 1. So we're looking at 172 with a max drawdown of 38. Let's see, 172 with a max drawdown of 38. These are the numbers I'm kind of watching when I'm building strategy, those two numbers, and then I'm looking at the profit factor over here. So yeah, it's actually a bit better drawdown now. I didn't see what the profit factor was. I'm kind of flying through here, but it really annoyed me that they removed the average trade. That was just like the dumbest thing ever, because that's very important, especially based on your fees. I will say it's very important that when you're building a strategy, make sure your fees and your commissions right here are correct. I even am building strategies now that I default have the commissions be 0.06, and then if you're if your commissions are actually 0.06, I would go up another couple. I'd go to 0.08. You just want to account for a few trades going bad here, there, going wrong, something not triggering right. It just happens, and I find if you are more lenient with your commission price, it gives you better expectation for the future, what future price action or future strategy reality will actually be. So that's my thoughts there. Okay, going back here, let's look at the exponential AI. I do find that generally whole numbers are a great place to start. So I'll start with like -1. So we're looking at 152 and 37. Again, that went down because I turned the commissions up to be more realistic. So looking at 142 or 152 and 32nd. Wow, 37. I'm getting super tongue-tied here. And let's see what that does. Okay, so we've gotten better. Drawdown is actually a little bit worse though. So in this case, I would probably do a little bit of deep back testing to see which of those two was better. But still, it's not a terrible place to be starting, either one of those, with no other indicators referenced. So again, this is like literally just using the bumper bands kind of blindly and not cross-referencing other indicators. When I build strategies, I generally will have a couple other indicators on the chart that I cross-reference to help get in trades. So you can see on this chart here, anytime it closes below it, it won't always go in a trade. So it closed below right here, it closed below a lot. Not a lot, but at least a couple times. I guess right there is where it closed, and right here. And it didn't, oh wait, well that's because it was already in a trade. Let's look at a better representation of that. Later on here, yeah, so right here, for example, like it closed below there, closed below there, closed below there, didn't enter trades any of these places, which is good because it didn't close. Well, I guess it would have been nice. Look at that. It would have been nice if it closed there, but you can't catch every trade. This is the trade-off of using a strategy. Like if you would have entered in when it was red, you would have entered all the way back here, and it would have been a losing trade. Or if you would have entered at the bottom, of course it would have been the bottom, but that's just using hindsight, and that's not realistic trading. So, okay, all that to say, it entered a trade over here based on these other indicators. Still was a losing trade, but then it entered a trade right there. That was a massively great winning trade. So that is kind of how I look at building the strategies with them. But when I'm starting out, I'm just kind of looking at the Exponent AI. If I'm using some different time frames, I'll try it out, and then I'll see what's best. You can try like 0.5 and just kind of try to find what, if any numbers are getting a little bit better, and then I'll usually go just like 0.1 down or 0.1 up just to see if I can get a little bit better. But I'm not going to build a strategy from scratch here. Probably I will do that in a video another time. 205. So yeah, look at that. That's a much better strategy so far. The other thing to watch is when you're starting a strategy is look at the total number of trades. You generally want a pretty high total number of trades because if you don't have a lot of trades to work with, as you try to whittle down and refine it, you're going to be going to fewer and fewer and fewer trades, which have more and more possibility of being over optimized. So when you're looking at 2,000 trades, it's probably not over optimized at that point. Again, not financial advice, but this is my experience. And when you're looking at that many trades, that's pretty realistic of how it's going to be responding. But this equity curve is not what we want it to be yet. So at that point, I would, whenever I'm happy with the exponent AI, I would go through and slowly mess with time factor and length and type Maybe a little bit of offset. Usually I'll wait till the very end to do offset. I think offset is, you can over optimize if you use offset too much. So I tend to stay away from it till the very end and just offset, tweak it a little bit. So let's look at another time frame. We kind of started, pretty great strategy so far, was massively profitable in the bull market, and then the bear market chopped sideways and some nasty downside, then massively profitable again here at the end, then been chopping around. But that's, I bet if you use some other indicators, you could get the strategy looking really great pretty fast. Let's go to like a 2-hour time frame. I'm going to start with it at 0 just to see where it's at. And then we'll look at, maybe we'll look at the 4-hour, but this is generally just kind of the explanation of how I do it. I don't think we need to go too much deeper after this. And again, remember, I'm using pretty high fees here. I'm looking at 0.06 fees, which are, I would say, hopefully pretty realistic for most traders. Okay, let's see, come on. Again, it's probably taking a little longer to load because of the color gradient, so if you want things to load a little faster, if you're building with it, you can turn the color gradient off, and that will probably help with your load time. All right, so not super great on the 2-hour just off the bat. We can try -1 again. You could also go up, but I find that going to higher, if I'm going up in time frame from the base, it's generally better to take the exponent lower, but who knows. Okay, look at that. It's a whole lot better. Now let's try 0.05 just to see, and I'll probably leave it at that. Oh, nope, that's definitely not better. Interesting. That's a lot worse. So looks like -1 is the magic number right there. You could probably try like -0.9 or something like that. 233 is your profit. I didn't catch the drawdown, but it doesn't really matter right now. We're not building the strategy yet. While it's doing that, we'll look at a couple other short strategies I've been building. So this is a short strategy for Bitcoin on the 1-hour time frame. The drawdown is kind of nasty because of this one move right here in 2018. But other than that, the drawdown is actually pretty low. It's actually in the last 5 years. In the last 5 years, it's a really small drawdown. And again, it's a short strategy. I do think short strategies are actually very important to have, at least for myself, because you can just buy and hold for, if you're going through bear or bull markets, you can buy and hold, but it's kind of unfortunate to buy and hold in bear markets. So for me, I want to have a way to be making income and increasing my profits during a bear market. So I'm building all of these short strategies that will be just really incredibly helpful during the bear market, which I hope that we're not in the bear market, but it's starting to look more and more like we're in the beginnings of the bear market. And if not, don't want to jinx it. If not, that's great. These strategies work well during a bull and a bear. And I'll just go heavier into short strategies if we kind of confirm that we're in a bear market here in the next couple weeks as the weekly trend starts to be known. Okay, so that's not quite as good. Looks like the drawdown may be better. Actually, don't remember. 33 is where it was there. Hopefully, it doesn't have to reanalyze the whole thing. Anyway, I'm not gonna. Yeah. Okay, so the drawdown was way better with that at 0.9. Maybe that would be something to go off of, but who knows. So that's how I use and build with the Bumper Bands AI. Hopefully this video was helpful for you guys, and yeah, feel free to just experiment on your own charts, your own assets. All of these are built on the Bitcoin index chart, which I think is just safest to across the board build on. I've been trading off the index chart, even though I used a couple different exchanges, and it works fine. Every once in a while, the trade will be a slight different net profit or net loss, but over time, it tends to generally work out fine. But okay, I will see you guys in the next one. Hopefully, you guys stay safe, enjoy these new tools, and let me know if you have any questions. I'll be hanging on the Discord at any point. See you guys next time.